In a move that shocked global financial markets, Japan executed a massive $1.7 trillion sell-off of U.S. Treasuries. This marks the largest capital pullout in U.S.-Japan financial history. This decision immediately shook U.S. stock markets, with the Dow Jones plunging 4,800 points and Nasdaq falling by 12%, wiping out $5 trillion in market capitalization within a short period. The big question is, why did Japan make this decision? What led to this shift in the financial relationship between these two close allies? While the U.S. government was focused on domestic stimulus measures, Japan's move highlights a shift in financial loyalty, as they pulled out from U.S. assets amidst growing trade and political tensions. This is the moment when financial experts begin to consider the long-term effects of this sell-off. Is this just a temporary adjustment, or is it signaling a major shift in how countries interact with the global financial markets? Japan's move has sparked a big debate in the financial community, as investors and economists realize that major economies are shifting away from U.S. assets and looking for safer investment alternatives. In particular, Japan's withdrawal is a clear sign of loss of trust in U.S. economic policies. In addition to the massive decline in stock indices, global investment funds are pulling money out of the U.S. and moving into other markets, particularly in Europe and Asia, where currencies and financial policies are less volatile. This raises a major question about the future of the U.S. dollar. If Japan's pullout is just the beginning, will other countries follow suit, leading to a global currency crisis? Will the U.S. dollar lose its position as the world's reserve currency as countries shift to other payment and investment methods, like the euro, yen, or even China's yuan? Many experts fear that a massive financial shift could cause significant instability in the global financial system, as countries look to diversify their investment portfolios and reduce their dependency on the U.S. dollar. Policy decisions in the U.S. will have to contend with dramatic changes. The U.S. government, if not acting swiftly, will face a wave of capital withdrawal from traditional allies, potentially weakening the U.S. economy and sparking fierce competition with other financial hubs around the world. Can the U.S. weather this storm? Can the U.S. economy continue to grow while traditional financial partners shift away, and is there a strategy that can prevent this global financial crisis from deepening? As countries pull capital from U.S. assets, it's clear that this trend isn't limited to just one nation. This creates a financial wave that could spread globally, forcing traditional financial markets to face fundamental changes in trade and currency relationships. With Japan pulling out of U.S. treasuries, other countries, including China and EU nations, may follow suit. These countries have strong incentives to reduce their dependency on the U.S. dollar, especially as relations with the U.S. have become more strained than ever. A major question arises: is this the beginning of a global currency revolution? A new global financial system may take shape, where countries no longer have to rely on the U.S. dollar to conduct international transactions, instead turning to their own currencies or alternative payment methods like cryptocurrencies and blockchain technology. This presents a huge challenge for the U.S., as allied nations are increasingly seeking alternative financial solutions, which could diminish the U.S. dollar's role as the global reserve currency. Can the U.S. maintain its financial leadership as major nations move to disconnect from USD influence? Countries like China and EU nations could intensify efforts to develop stronger currencies, such as the Chinese yuan, CNY, or the euro, to serve as a foundation for global transactions and reduce reliance on the US dollar for international agreements. This shift could lead to the emergence of new financial platforms, like BRICS development banks, where these nations will use local currencies instead of the US dollar for international transactions. This could diminish America's influence in controlling the global economy, ushering in a multipolar financial era. Can emerging nations take advantage of this opportunity to build a stronger, independent financial system to compete with the US and Western economies? That's a question many financial analysts are raising. As countries move away from the US dollar, are we witnessing the beginning of a multipolar financial world? A world where not just the US but other financial powers like China, the European Union, and even emerging economies lead global financial flows. Financial experts are currently debating the possibility of creating a new financial system, where major countries and regions will operate their own financial platforms, reducing dependence on the US dollar. Such a system would create multiple global financial hubs, instead of just one dominant center. A key question is, can countries like China, the EU, or even BRICS nations develop an independent global payment system, competing with the US and the dollar? China is intensifying its efforts to develop the Chinese yuan, CNY, as a global transaction currency, while also promoting electronic payment systems, like CIPS, cross-border interbank payment system, to create a global payment platform independent of the US dollar. This is a clear move by China to reduce reliance on US-controlled financial systems. Meanwhile, the European Union has also been pushing to increase the use of the euro in international transactions and is working on developing independent financial tools, not dependent on the USD. The EU has even planned to build an independent payment and currency zone, helping European nations reduce dependence on the US. With the rise of blockchain technology and cryptocurrencies, countries are exploring and testing central bank digital currencies, CBDCs. China has taken the lead in developing the digital yuan, and could become the first country to implement digital currency globally. This offers a huge opportunity for countries wanting to break free from the US dollar and create alternative payment systems. As countries and regions increasingly seek to reduce their reliance on the US dollar, this creates a multipolar financial environment, where no single currency dominates the global financial system. Instead, other currencies like yuan, euro, and even Bitcoin and digital currencies could compete to become the primary means of payment in international transactions. However, this will not be easy and will undoubtedly face challenges. The global financial system has been built around the US dollar for the past century, and changing this structure will require countries not only to develop independent financial platforms but also to build trust and stability for these new markets. Emerging countries will face many difficulties in creating new financial systems, as they will not only need to replace the US dollar but also establish security and stability mechanisms to attract international investors. A multipolar financial world could lead to greater fragmentation in the global economy, with many regions and countries controlling their own financial platforms. This could increase financial instability, as nations deal with cybersecurity threats, liquidity issues, and financial conflicts arising from this fragmentation. Additionally, the shift of some countries to digital currencies and the creation of internal financial systems may affect the scale and stability of the global financial market. The current system operates based on a network of interconnected countries, but if major countries and groups like BRICS want to break away from this system, they will have to rebuild their trading and financial cooperation networks from scratch. So, is a multipolar financial world the new step forward? Can we see a more balanced financial world, where developed countries and emerging nations have equal power in setting global financial rules? As major economies like China, the EU, and even emerging markets begin to shift their financial strategies, are we witnessing the rise of a multipolar financial world? A world where not only the US but also other financial powers like China, the EU, and emerging economies control the global financial flows. Countries like China, with its growing focus on the Chinese yuan, CNY, are leading the effort to replace the US dollar in international transactions, especially in Asia and Africa, where yuan-denominated transactions are becoming more prominent. Could this be the opportunity for the yuan to become the dominant global payment currency replacing the US dollar? As countries seek alternative payment solutions, China could emerge as the leading financial power, holding a dominant role in global financial transactions. However, if China and the European Union lead global payment platforms, what will the US do to maintain its financial position? With the US dollar now facing increasing competition from other currencies, can America restructure its financial system to maintain stability and preserve its position in the global economy? In reality, we are entering an era of multipolar financial systems, where large countries will no longer participate in financial transactions solely based on the US dollar but will instead develop their own internal payment methods and independent international payment systems. This raises a major question about the future of global finance. Will countries trigger a global payment revolution, where financial companies and international banks no longer depend on major countries, and instead, decentralized financial tools such as blockchain technology and cryptocurrencies emerge. Blockchain technology could change the financial game. New financial platforms, powered by distributed technology, will help reduce the control of major countries and create a fairer financial environment. As financial systems become more transparent and secure through blockchain, this will boost trust and participation from emerging economies in the global financial system. While there are many challenges in building new financial systems, this opportunity also presents the possibility of restructuring the global financial system. Countries will not only need to cooperate and negotiate but also build trust and stability in the platforms they develop. This will not happen overnight, but could be a long-term process, as countries need to rebuild their financial infrastructure and create independent payment systems, reducing reliance on current currencies, especially the USD. With this shift, can the US maintain its financial influence, or will it accept that the financial world is entering a multipolar era, where countries compete to build their own powerful financial systems? Perhaps some countries will maintain international cooperation, while others will separate themselves and create independent financial systems. However, regardless of what happens, this financial innovation will surely bring new opportunities for countries and smaller financial regions, opening the door for more flexible, free financial platforms. So, will a multipolar financial system lead to a more sustainable and fair financial world, or will it create division and competition that destabilizes the global economy?